This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jeff Stewart, founder and managing director of GPO Fund. The Global Public Offering Fund is a growth equity fund investing in founder-led pre-IPO technology companies that can benefit from access to global capital markets. Jeff, thank you for joining us again.
Thank you. My pleasure.
Can you give us a short update about yourself and what have you been doing since our last interview?
Yeah, we've been focused on growing our fund and backing ambitious founders who want to accelerate their international growth and accelerate their path to the global capital markets.
Well, great. And so let's talk about your investing experience. So what company do you regret not investing in?
Well, lots. But I think a couple stand out. Most recently, Current. We launched our fund in 2018 and had known the team over at Current for a long time. Really impressed with their technology. And we're just too early in our fund structuring to be able to back that. But I think you're going to see great things out of them. And Andreessen Horowitz has been very supportive lately, and I think you'll see them continue to grow.
And why didn't you invest in them at the time?
At the time, we were early in starting our fund, and we had limited bandwidth and limited financial resources, that was one that got away. I think another one that got away was Coinbase. I met the team there very early on, really just as they were starting out, and was super impressed. Knew they would go on to do great things. And I think at that stage, the bulk of although we now invest at the growth stage, sort of $100 million valuations and up, the bulk of the investments I've made over time were at the angel stage, and you just see these founders and you get their passion and their understanding of the underlying technology, and you just know they're going to do great things. I had that feeling with Tableau, had that feeling with the team at Twilio, and you regret not moving fast enough on those when you see those rare founders that are going to go on to do great things.
Understood. And so, what sector are you passionate about now, and why?
Well, having started companies in the fintech space. We're very interested in financial services. I think there's a lot of innovation that's still going to happen there, and clearly a lot of room for improvement. We as entrepreneurs got involved in AI very early on, and I think again we're just scratching the surface of what's possible. Particularly the developments in deep learning over the last couple of years have just enormous potential. So we're looking at that. We tend to like things that are very data intensive, really large data sets. That creates barriers, that creates network effects. We like that. And lately we've been spending a lot more time in sort of the direct to consumer space, e-commerce. I think you're going to see some 100-year brands being built over the next 3 or 4 years. Pretty exciting stuff.
Great. And are you avoiding any particular sectors, and if so, why?
Well, we're very focused on businesses that we think can grow globally. We're big believers that most of the people in the world don't live in the U.S. and that most of the global economy is not in the U.S. So we think that if you're going to build a truly big, important global company, you need to be thinking about international early. And healthcare is an area that we haven't. Because of the U.S. regulation, because of the way the U.S. Markets are so different than a lot of the world, and because it touches areas of science where we're less comfortable, we've stayed clear of healthcare. But that's certainly an interesting one. Insurance, on the other hand, we look at it as fintech. That's an area we have looked into, but healthcare we've stayed away from.
Understood. So let's talk about your experience with startups out there. Always love to hear the great and the not so great. So what was your worst experience with a startup, without mentioning names, of course?
Well, I think it's ones we started ourselves. Not all startups were meant to be, and I remember, there's no playbook here. You really need to experiment and try things, and sometimes you start out and you realize it's a bad idea. And back in the early 2000s, had this idea of using satellite data and processing that data in a way that would be valuable to institutional investors, particularly hedge funds, and launched a company called Seen from Above. Spent 4 or 5 months, 100-hour work weeks of my life, really digging into that and getting to know the underlying technology and the players. And I remember the day I was on the phone with a scientist who was at a download station up in Alaska, and he's explaining me the process of how he's used to dealing with governments, but how he would work with my company as a startup. And I realized we're too early. We're at least a decade too early. And it was frustrating to essentially waste 4 or 5 months of my life on a business that ended up not moving forward. But I guess the good thing that came out of it was we invested in 2019. We invested in a company called Spire Global, incredible founder. And what he's done is he's launched microsatellites. So he's got a fleet of microsatellites, and those satellites monitor the Earth, and he's selling that data back down to industry and doing all sorts of analytics, and he's going to build a data business with billions of dollars. So I guess it wasn't a complete waste, but it certainly was frustrating at the time to see all that effort, essentially be a waste.
Great. And then on the other side of that coin, what was your best experience with the startup?
Well, I think that what I find most rewarding is when you mentor someone, when you change their life by having them be involved in your startup, and then you see them go on to start their own company, to buy a house with exercising options that you gave them, and seeing them hiring other people. It's that sort of next that follow on that happens after your startup is really exciting, and that you've had a positive impact on someone who had high potential coming into your business, and probably would have succeeded with or without you, but that you definitely had an influence on their success and the success of the company they started.
Cool. And so what are the challenges you see your companies facing today? Is it regulatory? Is it technical? Is it market? Where do you see your startup struggling the most?
Maybe this is ask a plumber and he'll tell you it's plumbing, but for me, we're very focused on companies being able to move into the public market sooner. So it used to be when I first got into venture capital as an entrepreneur, VCs would say, A, B, C is great, but D rounds are for dead. You go public after your C round, and you had great companies that would go public at $200, $300 million valuations. And there were hundreds of them that go public every year in the U.S. And then there was a big structural change in the U.S. capital market. And we think that was to the detriment of entrepreneurship. So SPACs have been an attempt to solve that problem, and have done a good job at solving a piece of the problem, which is the headache and complexity and distraction associated with listing in the U.S. And SPACs have an enormous amount of potential. We have an alternate path that we've spent a lot of time studying and building a playbook, which is listing abroad. It turns out about 10% of all IPOs are cross-border. It turns out that the international capital markets are very receptive to companies sort of at that sub $2 billion, think 400 to $1.4 billion valuations. They can't get enough of high growth, high potential technology companies. So, we think that it's important for companies to get the credibility of moving into the public market, getting the ability, most importantly, the ability to attract talent, the higher profile, the ability to do pocket acquisitions and super flexible capital structure. So I think that, the challenge we think the most about is how do you get companies into the public market sooner, and so that they are de-risked by that flexibility and higher profile.
Well, great. Well, you see a lot of sectors and applications out there. If you had to pick one or two that you think are really good immediate opportunities to go after, what would you put at the top of the list?
Like I said, I think we're just scratching the surface in artificial intelligence.
Mm-hmm.
It has broad applicability. I think that businesses that can efficiently take advantage of a global footprint are going to do well. Cost of talent in other parts of the world, the access to expertise, different cost structures for accessing customers allows you to innovate and experiment. So I think any business that is poised to benefit from having a global footprint is interesting to us.
Well, that's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think one thing that's pretty interesting is the pace of company formation. I think, I remember when I started my company, there weren't a lot of mention. I was, although I had spent time in Silicon Valley, and I was in New York, there weren't a lot of mentors. There wasn't a lot of support. And you were looked at kind of as an oddball as someone starting companies. Today there's a lot of incubators. There's a lot of prior founders who are investing and mentoring. There's a lot of content and information out there. And I think the support infrastructure combined with a desire to start companies is drawing more entrepreneurs into it. And I'm very excited about that. And I think I would just repeat advice I got very early on, which was it was a neighbor of mine was an entrepreneur, and I said, "What advice do you have for me? I'm going to start a business." And he said, "Jeff, the only thing I regret is I didn't do it sooner." So I think I'm very excited about more people trying entrepreneurship sooner.
So what do you think is driving the current wave of startup innovation? Is it, COVID's over and we have a new set of care abouts? Is it people ready for a new thing? I don't want to go back to my old job. I want a new job, so I'll do a startup. But what do you think is driving it now?
Well, I think it's social connection through the internet, right? I mean, when it's a lonely job starting a company, and when when you don't know many entrepreneurs, the entrepreneurs are sort of running family businesses, it's hard to get the courage to start a business. I think that the internet has exposed more people to more entrepreneurs and saying, hey, wait a minute, like maybe this isn't such a crazy idea. There are lots of case studies of successful entrepreneurs. And also, quite frankly, I think you meet more entrepreneurs and you say, wait a minute, that guy made a $200 million business. He's a goofball. If he can do it, I can do it. So I think it's not just reading about the Andrew Carnegies of the world. I think you also have to interact with people who are making mistakes and who aren't doing things right all the time. And that I think has given more people the courage to start a business.
Well, great. Well, appreciate you sharing that with us today. How best for listeners to get back in touch with you?
Well, I would say we're recruiting. We're looking for sort of junior analysts, interns, people who are excited about entrepreneurship and are excited about venture capital, particularly growth stage venture capital. So I would say our website is a good place to learn about us, gpofund.com. But my LinkedIn profile is probably the best way if you're looking for employment or an internship, because we are growing.
Great. Well, I'll put that in the show notes and keep that in mind when I talk to new people in the field. And appreciate your joining us today and hope to have you back for a follow-up soon.
Great. Thanks. Appreciate it and love the show. Bye-bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.